Welcome to Bloomberg New Economy Conversations. I'm Emily Chang. As always in this series, we are talking to business leaders who are operating on the front lines about the key decisions they're making in the COVID-19 pandemic, as the pandemic brings so many parts of the global economy to a standstill. My guest today is the founder and CEO of Revolution, Steve Case. Steve, so good to have you today. Thanks so much for joining us.
Great to be with you.
So you are on the front lines of so many small and medium businesses who are facing a lot of challenges at this time. What are the risks they're facing, and how much are you seeing them struggle?
It really depends on the sector and also the stage. Obviously, at Revolution, we have a seed fund, a venture fund, and a growth fund, and the dynamics, of course, are a little different depending on kind of where they are in that cycle and how well capitalized they are. But overall, I've been really impressed by how entrepreneurs have really rallied. It's obviously been a difficult period now, coming up on almost 6 months. There have been some companies that have certainly been challenged, but they also have used it as an opportunity to kind of reimagine where they go forward. For example, in Sweet Green had to close all its fast casual restaurants, but accelerated its efforts around delivery and expanding its menu. DraftKings, one of our companies, actually went public a few months ago. Who would have thought you'd be able to go public via a virtual roadshow, and also when most of the professional sports were not even playing, but they focused on some other sports, and that ended up driving a lot of opportunity for them. Tempest, company focused on health, initially on oncology, pivoted and also doing some things related to to COVID. So it's been interesting to watch these companies kind of, instead of just viewing them as challenges, of which they obviously had their set of challenges, also trying to look at it as a potential opportunity. What can they do, different and better, so when they come out of this, they're even a stronger company.
So how has Revolution and how have you and your colleagues jumped in to help? I mean, is it like a lot of phone calls, a lot of pivots? What are the decisions on the front lines that you're making?
Well, initially when this first hit and everybody moved into kind of like shelter mode, which I guess now about a little over 5 months ago, we actually decided to slow kind of looking at new investments to focus on our existing investments, and did that for a number of months. Now we're back in looking actively at new investments. We also decided, in part because one of my colleagues, a co-founder of Revolution, Ron Klain, has a lot of expertise related to healthcare and COVID because of his time when he was President Obama's Ebola czar. We hosted, I think it was 6 or 7 different conferences for our CEOs, trying to help them understand how to manage through this in terms of trying to make sure people are safe, and also think about reopening in a smart kind of a staged way. And then, of course, with each individual company, it depends on what challenges they have. What can we help in terms of particular strategies, or particularly partnerships, or other things that can really allow them to accelerate their growth coming out of this. So it varied, but overall, as I said, I was quite impressed. Initially, people were everybody was kind of thrown by this. What does it mean? But it's been impressive to watch how many CEOs have really kind of moved from just managing to imagining, and really trying to pivot to seek new opportunities, not just kind of hunker down and deal with the many challenges of the moment.
So, Steve, a few weeks ago, you wrote an op-ed in the Washington Post calling on Congress in a new aid package to focus on startups and companies that would be adding jobs and not just established businesses. We spoke at that time, and since then, Congress hasn't been able to compromise on any aid package at all. What do you make of that, and how big a loss potentially could that be?
And that's very disappointing. Obviously, DC has gotten particularly partisan. We're dealing now with an election year, an election just a few months away. So I understand why tensions are high, but it's a real missed opportunity in terms of Congress both supporting some of the existing businesses, including small business, restaurants, and others that are really struggling greatly. Many have gone out of business, and many more will. But also, as you said, just also focus on new businesses. So big job creation comes not from existing businesses, but from new businesses. So the focus of the initial congressional action on supporting the businesses that already existed made sense, but now it's time to supplement that and also focus on new businesses, startups that really are the big job creators, and focus on them everywhere, not just in places like Silicon Valley, which gets most of the capital and most of the attention, but all over the country. So we're really creating jobs everywhere, and we're also doing it in a much more inclusive way. So hopefully, when they come back to Washington and start focus on this again, that there will be a package that gets passed, and hopefully this time it will include more support for new businesses and startups that can create jobs and drive economic growth. But so far, obviously, it's been a disappointment that there's been such this impasse.
So if there is no new package, what do you think the outcome will be? What are the
Well,
consequences?
I think more existing businesses will hit the wall and go under, not be able to reopen, and a lot of new businesses that might have started, that might have created the companies of the future, the industries of the future, the jobs of the future, will not get started, and so it really will end up being a big negative for the country. And we're also starting to see, and I'm sure you've seen more of these reports, where because of people are in this kind of hunker down shelter mode, a lot of people have decided to be in different parts of the country, not where they were 6 months ago. And including a lot of people from Silicon Valley have decided to at least temporarily move someplace else. We think that's a great trend that can accelerate what we call the rise of the rest, backing startups everywhere, not just in places like California, but we need to make sure that the capital is there to support them. And some of that capital can come from the government through some of these programs. Most of that capital will obviously come from venture capitalists, and hopefully we'll see the growth of better angel networks in many of these cities, more regional venture capitalists in many of these cities, and some of those coastal investors paying attention to other parts of the country where some of the big breakthrough innovations in this next third wave of the internet are likely to happen.
Right. You've done many cross-country tours where you've been looking at and highlighting these businesses that are not in Silicon Valley. With companies like Google and Facebook now saying, their employees can work from home for a lot longer, some companies saying their employees can work from home forever. Do you see a fundamental shift in population distribution, and how does this impact the tech economy?
Well, I think it could. We've long talked about the need to have a more dispersed innovation economy. So there are jobs being created everywhere, every community seeing the benefits of innovation and disruption, not just the negatives of it. I think this absolutely can be that tipping point where there's now more people who even 6 months ago perhaps wouldn't have conceived of leaving Silicon Valley to go someplace else, now are living someplace else. And some of those will decide to stay where they've decided to shelter while continuing to work for their existing company. Others may decide to do something else there, either join a startup or join some other company there. The Facebook data, I think, was pretty interesting. I think, as I recall, 40% of their employees said if they had the option of working remotely, they would. And 75% of that 40% said they were inclined to actually move someplace else. So I think that can start shifting the dynamic in terms of talent. We've seen in the last real half century kind of a big brain drain where many parts of the country, a lot of people that wanted to be part of that innovation economy, wanted to be part of the startup tech scene, felt they had to leave where they were to go to the coast, particularly go to Silicon Valley, because that's where the action was. That was where the money was. That's where the big disruptive companies were growing. Now I think we can see an acceleration of a boomerang of people returning, which ultimately will make for a stronger country where we really will have a more diversified and inclusive economy. So I hope this really is a tipping point. It's not going to happen automatically. We need to make sure that people who are thinking about making that move have the opportunity, including the capital they need to start and scale companies. And we need to make sure that communities around the country are supportive of startups. But it really is a moment where if we make the right moves, some at the federal level, some at the local level, mostly at the entrepreneurial level, that we really can move towards a much more inclusive economy. We can see these cities rise and startups of the future happening everywhere, not just in a few places.
If that's the US, what about the rest of the world? Do you see economies in other countries crumbling? Do you see other countries that have handled this better than the United States?
Yeah, well, obviously, I'm not an expert in COVID or these kinds of health policy issues, but clearly other developed countries have managed this more effectively than we have. If just look at the raw data. Hopefully that will change. Hopefully we'll get it right as we head into the fall and or start thinking about reopening more businesses, schools, other kinds of things. But clearly it's been more difficult in the last few months than I think it should have been, which was disappointing. There are some countries that are still struggling, but many are getting back to some form of normal. And I think that's been encouraging to see. But part of what we need to focus on is in our country, not just getting back to normal, but how do we have a better normal? Because normal really wasn't working that well for a lot of people 6 months ago. There were a lot of people in a lot of cities feeling left out by what we celebrate in places like Silicon Valley. So that's why the rise of so important, this boomerang of talent so important, more capital going to more people and more places is so important. And it's not just about place, it's also about the people. Last year, over 90% of venture capital went to men, less than 10% to women. Last year, about 1% went to Black entrepreneurs, even though they represent about 13% of the country. So we have to do a better job of making sure capital really is backing great ideas and we have a broader aperture. It's not just certain people in certain places that get most of the capital, but everybody everywhere really has a shot at creating a startup, a shot at the American dream.
Speaking of capital, I know Revolution is backed by people like Jeff Bezos, Ray Dalio, Meg Whitman. Going into this, there were a lot of VC funds that raised, huge funds, pretty well capitalized. Do you worry that venture in general could dry up, though, as this continues, as one of the only potential sources of capital for up and coming companies, especially if Congress doesn't deliver?
I think venture capital is continues to be a strong kind of asset class. People running big institutions do recognize they need to allocate a certain percentage of their portfolio to kind of private equity, including venture capital, and that's where the greatest returns have been generated in the last few years, and that's likely to continue, particularly in the very low, almost no interest rate environment we're in. I think it does make it a little easier for the firms that have a track record and have been around for a while to raise follow-on funds. It is a little harder for people to raise first-time funds, and it's harder still if you're in one of these rising cities and you don't necessarily have access to the networks that some others do. So that's why, again, it's so important that we have a more inclusive approach, not just backing startups and backing entrepreneurs, but also backing the next generation of venture capitalists and doing it all across the country and doing it in a much more inclusive way.
Even before this, there was concerns about the Chinese tech scene surpassing the US tech scene. And obviously, we've seen tensions ratcheting up between the United States and China. How do you see that playing out? And do you have any concerns about perhaps China surpassing the United States as a result of the mishandling of some of these issues in our own country?
Sure, that is absolutely a risk. China over the last decade has really emerged as a tech powerhouse. As you well know, some of the most successful companies have come out of China, and some of the technologies that are going to drive the future, AI, robotics, other things, there's a lot of leadership in China. So we need to make sure that we were kind of looking towards where the market's going. As I said, in hockey, Wayne Gretzky was a great hockey player because he didn't focus on where the puck was, he focused on where the puck was going. And some of those technologies are areas where the United States has not invested as much as it should in terms of basic research. We need to step up our investments in basic research, or there is a real risk that we could kind of lose our lead as the most innovative entrepreneurial nation in the world. I also believe it ties back to what I was talking about with Rise the Rest, that we were likelier to win that next battle, kind of create these industries of the future, if we have a more inclusive, dispersed approach to innovation. If we're just kind of have all our eggs in a few baskets, and it's less likely that we're going to have the opportunity to seed the companies that really could drive that and back those technologies. And some of the best universities that are really, kind of leading in some of these technologies, robotics, for example, best university in the country, probably in the world, is Carnegie Mellon, which is in Pittsburgh. It's not in Silicon Valley. It's not in Boston. It's in Pittsburgh. We also see great research universities and all across the country. So how do we build on that intellectual capital and allow people who are at those universities to stay there and start companies there and scale companies there that will help those communities, but also will help our country kind of win this next battle with China and other countries who are, clearly are trying to make sure that they're taking the lead in this next wave.
You mentioned the IPO market and DraftKings, which went public, one of your portfolio companies, despite the freeze on professional sports. What do you think about the public markets in general and how the window looks, given that if there's one thing for sure about the next 6 months, it's only more uncertainty?
I think the public markets have been surprisingly robust. Obviously, there was a hit initially when people were quite nervous, but people are now kind of looking beyond the current crisis, looking at kind of long-term opportunity, longer-term growth rates. And as a result, you've seen obviously a significant rebound in terms of the markets. And the IPO market has been strong. And another company we backed, BigCommerce, just went public a few weeks ago, quite successful, leveraging some of the e-commerce trends. And we're seeing a real strong momentum around SPACs that have kind of been in and out of favor. Right now, they've become quite popular, and there are a number of firms raising SPACs, number of companies, including actually DraftKings, deciding to go the SPAC route. So I think the public markets are quite robust. I think that's likely to continue, and a lot of great companies are now looking at the option of going public. And who would have thought that 4 or 5 months ago, when we were in this first kind of phase of the COVID lockdown? But it's been amazing to see how strong the markets have been and how open they are to backing growth companies that really are building some of the interesting businesses for the future.
All right, Steve Case, founder and CEO of Revolution, thank you so much for joining us. Great to have you here.